Hey, welcome to Echoes of Impact with Noura. This is your host, Noura Al Masri. Welcome to the show. Today, I wanted to address a very important topic and a lot of people worry about is purchasing your home. A lot of Americans dream about buying their own home. Some people already got it. Some people they're still dreaming to have it. And that's always the goal of everyone to get their own house. But with this time, the interest rates is high, the house prices is high. People actually in the last 2 years, at least last 2 years, they've been wondering, is it a good time to buy a house? Should we wait? Is the interest rate is gonna go down? Is the prices gonna go up more, or are they gonna go down? What should we do? When is it the perfect time to purchase a home? And that can be really something, and it's a valid question, let's say. And this is why today I brought some guests. They are experts in the field. I'm not going to tell you who did I get for you, but we're trying to complete the circle for you to see people who are going to give you some advices when how to purchase a home, where when to purchase a home, what do you need to worry about in terms of insurance also. And I'm not going to talk about it so much. I'm going to actually cover an important part that my guests are not going to be able to cover for you. But since I am in the tax industry, I'm an enrolled agent, if you don't know, and I'm a tax accountant. Basically, I have some rules. I want to actually let you know about them when you purchase the house, or when you're selling the house, or even the use of your house. You can take tax benefits on that. So basically, so I'm going to just cover them randomly, and I'm going to tell you a little bit about each one. One of the really fun rules, when you're a homeowner, you can actually rent your house for up to 14 days during the tax year. So that has to be your house. That's a primary residence. Even a vacation house can be rented if you live in it at least 14 days plus during the year. You can still use this rule. Basically, let me give you an example. For example, people apply this in a way where you have an S corp, a company, and then you are holding meetings in your home. So you are renting your home to your company up to 14 days a year. It might be less, can't be more. I mean, it can be more, but the benefit is only up to 14 days. Of course, the rent has to be reasonable, because I just read about a case where someone was trying to charge his company hundreds of thousands of dollars for $14 rent. Well, of course, that did not go through. They allowed him much less amounts, but they disallowed the rest. Of course, you have to be reasonable. So keep that in mind. So imagine getting some money tax free. That can save you a lot in your business and in your own taxes. Another actually thing you want to make sure you know about is, let's say you have a house right now and you want to sell that house and you're making a profit. You are allowed to get up to $250,000 in profit on your own primary residence if you lived 2 years out of the last 5 years prior selling. So if you lived in that house for 2 years, you are allowed to actually get tax-free profit from selling your house up to 250,000. Now, if you are married, then you have up to 500,000 in profit. So this is significant tax-free money, right? So always purchasing a house is never going to be a loss, even if it's expensive, even if it's you're paying a high interest. Another thing, let's talk about if you are working from home. And now this actually can apply for rental as well, not only if you are a homeowner, but I wanted to tell you this because I see a lot of people miss this and I don't want you to miss it. If you're working from home, you are entitled to take home office deduction. That's the expenses you pay for your home actually can be deducted. Not all of it, of course, because obviously you have your bedroom, you're living in your home, but only the area that you use only for your business, desk or your office room, that you use it just for your business, you can deduct the expenses there. So, for example, your home, maybe 1,000 square feet, and then you're using 100 square feet for your office. That percentage of the expenses is going to be deducted. So you'll be able to deduct that. So make sure you are aware of that and use it. Now, there's one thing people get confused on with this. If you are working as an employee on a W 2, but you're still working from home, because now after COVID, we have a lot of these situations, you cannot take home office deduction. Now, when can you take the home office deduction? If you are on 1099, you are independent contractor, freelancer, you have your own business, you can take home office deduction. And you have no idea how much you can save in taxes or even get to refund. I had so many people who take advantage of that, like from my clients. They actually turn from owing to getting a refund just because of this very simple tax deduction strategy. Another thing, this is for you guys who are investing in rental. So if you're purchasing home to rent it out, this is also a great strategy. Why? Because simply when you are renting out a house, that's a business, and the house itself is an asset. An asset can be depreciated. And what depreciation mean is you can actually deduct money from your income. Taxable income will be lower. So let's say the house is for $100,000. And I'm just gonna throw numbers. It's not, don't quote me on this. There's several ways to depreciate. Usually houses for rent depreciated for 27 and a half years. So you can actually divide the 100,000 for 27 and a half years, and you get that amount, you depreciate that. That will lower your taxable income. And this is an amazing strategy. So make sure when you have a rental to make sure your accountant is depreciating the asset. This is really important. So, yeah, you have a lot of strategies to utilize when you are a homeowner. So, don't let this opportunity go away. I know I can't even say his last name, the Rich Dad, Poor Dad author. He's actually saying your home is a liability, not an asset. Yeah, it is, because if you're not renting, the house is not actually giving you cash flow, but it's still an asset, in my opinion. You can actually you can utilize it to get a lot of tax strategies in order to lower your taxable income. So you want to make sure you actually work with tax professional. You want to make sure you do tax planning just to see what is available for you. There are tons of tax strategies you can actually benefit from. And I'm going to be covering a lot of tax strategies and echoes of impact, because I think you should know it. You should know it. You should know what you are entitled to. But every one of you has their unique circumstances. So what works for you not might not work for me, and vice versa. So you really have to do tax planning. You're going to get a lot of benefit from that. So make sure you do that. And now I don't want to keep you here longer talking tax talk. I'm going to actually um, introduce my guests soon so you can get on more fun stuff on how to purchase the house. And I want to remind you, if you would like to be a guest on the show, email me at hello@echoesofimpact.net. Let me know why would you want to be on the show and what would you like to talk about. So make sure you do that. This is Echoes of Impact with Noura. We'll be right back.